the sovereign debt crisis has already started, and those charts are what show it. And but we're still probably in the gradually phase, and when and how the suddenly phase unfolds, I don't know. But as you and I have talked about in many conferences, we know it's coming. I try to, when I'm talking to people about that, just say, hey, look, don't think about, buy it today, buy what you can at 100,000, and honestly hope it goes down. Hope it corrects 50%, and you've got some dry powder to buy to double down on, and if it goes to 200, don't sell it. Be happy you've got it, and if you get some more free cash, buy it at 200.
Lepard sees this as an unprecedented opportunity. The adoption curve of Bitcoin resembles that of transformative technologies in history. Initial skepticism followed by rapid acceptance. Those who understand its potential early stand to benefit the most. Even at $100,000 per Bitcoin, Lepard argues that it remains undervalued. He predicts a likely 10x increase within the next 6 years, meaning Bitcoin could reach $1 million per coin. For those hesitant to invest now, he asks, if Bitcoin is at $1 million in 6 years, will you regret not buying at $100,000? The answer for most is yes.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
There are a couple of forms of money that exist in a society, and one of them is being debased, i.e. printed, and people know that it's being debased and it won't hold its value. They save in the money that they know is not being debased, or good money, and they spend the money that they know will be debased because they know that it won't spend as well in the future. And so the phrase, the law is, the bad money drives out good, which is you spend the bad money and you save the good money. And of course, before Bitcoin, this was all thought of in terms of gold and silver. And so if there were fiat currencies pre-Bitcoin, people would spend the fiat because they knew it wouldn't buy as much in the future, and they would hoard their gold and silver. So that's the general thesis of Gresham's law. And frankly, we see that going on right now. I mean, I sent to you pre the show some charts that showed that I believe the sovereign debt crisis has started. And the reason I say that is that in Bitcoin and gold terms, the US Treasury bond, which used to be the base layer of risk-free collateral, has depreciated markedly since 2020. It's down 200% compared to gold. It's down 2,000% compared to Bitcoin. So, in my book, the sovereign debt crisis has already started, and those charts are what show it. And, but we're still probably in the gradually phase, and when and how the suddenly phase unfolds, I don't know. But as you and I have talked about in many conferences, we know it's coming. It's there in the real estate market, and Bitcoin is going to demonetize all of these things, absolutely all of them. I mean, it still blows my mind that, Jesse Meyer's chart shows $900 trillion of, assets, of financial assets. If you include real estate, throw out real estate, it's half that. But, and Bitcoin's what, 2 trillion? I mean, 0.2 of 1%. I mean, good Lord. And this is the best form of money ever invented. Yes, I get it. I bought some at 10,000 and it's at 100. So I've got a 10 bagger. But let me just ask you this. You look at what it's doing, you look at how it got here, you look at how it's been compounding, you look at what it is, and then you ask yourself, if in 6 years it's at 1 million, are you going to experience regret that you didn't buy it at 100,000? And my guess is the answer is yes, because anything that does 10x in 6 years, and I think it will do that, you don't want to miss it. So I'm not necessarily suggesting you have to take all your money and plow into it. As we continue to make higher highs and higher lows, more and more people come to see what it is and come to understand it. And yes, I mean, it's like any form of technology adoption. And as you know in the book, there's some good technology adoption charts. I mean, there are people in the beginning who don't believe. They just don't believe. But then eventually it just becomes obvious and accepted wisdom that this is, better money than any other form of money out there, and one of the best investments that anyone can make. The difficulty, as you know, and it's incumbent upon all of us to help people through this, is for people to understand the volatility, because the one way people do get hurt, and I tried in the book to make this extremely clear, is that they don't know what they're buying. They buy in on the excitement and the price, run up, it corrects, and then they freak out and they sell. I've seen people do that, and it just breaks my heart. And that's why, dollar cost averaging, and there are a lot of books and articles you can read about dollar cost averaging, is so important. And having a long time frame and a long time preference. I mean, as you and I both know, anyone who's been in it for 4 years is ahead. But, there were some times, I was buying at 17,000 at Thanksgiving of 2017, convinced it was going to change the world. And, a year later it was at 10, and 2 years later it was at 4.5. I was looking at myself thinking, Jesus, maybe that wasn't so smart to do that. But then I revisited it all, did all my work, but that was kind of when I learned about difficulty adjustment and some of the technology behind it. Boy, this thing's ingenious. And so I doubled down, and so look, everybody has their own path to doing it, but I think that, I think it will become more and more obvious. And I think there really isn't a wrong price to pay for it if it's time. I mean, it's not just timing the market, it's time in the market. And it showed how much money Buffett made from the time when he was 65 to 85. And I mean, being in something that's growing consistently for long periods of time. I mean, sit down with a financial calculator and do the compounding, right, on an asset. I mean, if you can just compound an asset at 10% a year, if you're a young person, you can compound an asset at 10% a year for decades. I mean, there's just no way you don't end up silly rich, right? Yeah. And I think this thing's going much more than 10% a year. And I think it's going to run for more than decades. I mean, I think it's going to become the base layer of money. So I try to, when I'm talking to people about that, just say, hey, look, don't think about, buy it today, buy what you can at 100,000, and honestly hope it goes down. Hope it corrects 50% and you've got some dry powder to buy to double down on, and if it goes to 200, don't sell it. Be happy you've got it. And if you get some more free cash, buy it at 200.
What sets Bitcoin apart from every form of money in history is its fixed supply. Unlike fiat currencies, which governments can print at will, Bitcoin has a hard cap of 21 million coins. This mathematical scarcity ensures its long-term value appreciation. Lepard references Michael Saylor's projection that Bitcoin could reach $13 million per coin as it absorbs global liquidity. While such numbers may seem outlandish today, history shows that disruptive assets often exceed expectations. The Weimar hyperinflation example illustrates how those who transitioned to sound money, gold, preserved their wealth, whereas those who remained in fiat saw their savings wiped out.
This sound money argument has been going on for a long, long time. I mean, Jefferson understood it, right? Andrew Jackson understood it.
Yeah.
Garfield understood it,
They were young when they understood it, right?
I know, right? Lincoln understood it, but he took the wrong side of it, and printed greenbacks. I mean, yeah, so doing the history deep dive was very interesting, and I learned a lot in doing that. And this problem is as old as time, which is why Bitcoin is so unbelievably unique. As you would say, here you have a form of money that can't deflect. There are a fixed number of monetary units, right? I mean, hello? I mean, getting your head around that is so hard, and understanding that because of that, everything will look different. Just absolutely everything will look different. And that's why, Saylor can credibly make a claim that this will be 13 million a coin, because there's a fixed supply and productivity is growing and technology is improving. Eventually we're going to get to the point where the dollar really isn't going to be the numeraire. So, I think my kids and grandkids.
What is that point, Larry? What is that point?
When is that point? I don't know.
In dollar terms. So is that $5 million a coin? Do you think
who knows? I mean, that's the, and then suddenly part. And I just don't think we know. I really don't. I mean, look, I love Samson and I hope we go to 1 million this year. but honestly, I just don't know, Preston. I mean, I use the power law as my base worst case model, because I think we'll easily do that, because we've done that historically. There's 97% correlation. And then but I think we'll break that to the upside very clearly as, the Gresham's law piece of it kicks in. How just asymmetry is how all great fortunes are made. You buy things that have unlimited upside. And look, any investment, you can lose your money. Trust me, I've figured that out and I've done it. I've done some really stupid, Preston, and lost money. I mean, big money in a couple of cases. But the beauty of this business, as my old boss told me, is, when it works, you don't just make 2x, you make 5x or 10x or 15 or 20x. And, I love, Saylor's comment that, it's going up forever, Laura. I mean, you've got a form of money I mean, this is a millennium-year-old problem. I mean, thousands and thousands of years, we have never had a form of money that could not be diluted, full stop. And here you have a form of money that cannot be diluted. What do you think is going to happen? It's gonna, there's not enough of it to go around, and it's going to go to numbers that are going to blow people away. And, 20 years from now, it's going to be, it's going to be very obvious who owned Bitcoin and who didn't. And so, what I try to emphasize to my clients is just, the only wrong allocation is zero. I get it if you're afraid of it. I get it if you don't understand it. But, I look at people in my category. A lot of these people are fairly well-to-do, and they buy a car that costs over $100,000. I'm like, look, you can afford to buy one of these things. You really can, and you should. And they're like, nah, I don't know. It's a bubble. You paid less, blah, blah, blah. You know how it is, right? It's really hard for them to get their arms around. And, I use various different models. I mean, one model I think is a good one is the burning theater model, that fiat currency is on fire in a theater. And yeah, I mean, I've already got out the exit door, because I bought some cheap.
Yeah.
But, does that mean, and maybe it costs a little bit more for you to get out the exit door, but does that mean you don't want to get out the exit door? Do you know what I mean? I mean, if what you hold is going to burn, and this is going to go up forever, then you really want to get out the exit door no matter when it occurs. And, sometimes I use the Weimar example, where, it's like, yes, somebody who had paid more for gold, a couple of years in than the first person that bought gold. But at the end of the day, if the alternative, which was, German marks, became worthless, you were glad you had the gold. And so I try to use that, and the problem with that is that's a scary prospect for people, that the whole currency is going to fail.
Lepard discusses the psychological challenges preventing many from buying Bitcoin. He observes that even wealthy individuals hesitate, fearing it is a speculative bubble. Yet these same individuals spend $100,000 on luxury cars without hesitation. The reality is that Bitcoin offers a far greater return on investment than most traditional assets. To drive the point home, he uses the analogy of a burning theater. Fiat currencies are the burning theater, and Bitcoin is the exit door. The longer one waits, the more costly it becomes to escape. Even if the exit price is higher now than it was a few years ago, the alternative, staying in fiat, is far worse.